Hello, I'm Robin Da Vinci, and I like to think of myself as someone who has a lot of experience with personal and business finances. And today I want to speak to some common personal mistakes we make with our money pretty much on a daily basis. So I'm going to touch on the first 3 or 4 big ones. Number 1. Eating out. The more we eat out, and with the price of groceries, the more you're spending for food for yourself and your family. And so what you need to do is you need to separate it out and see what the costs are. Okay, here's what the food is, here's what the delivery is, here's what the tip is, here's what the tax is, and oh my goodness, family of 4 having pizza is now $64. We, in a society that's racing around constantly and really not able to get together with family, and maybe those family dinners have gone away. People are eating in various ways, not together. They're not making cohesive meals. They're not doing meal planning when they grocery shop. They're running in, getting a few things, running back out. One of the ways to save money truly is to make your own food at home. Actually sit down with the family, make a grocery shopping list, talk about what you want to eat. Don't buy stuff you're not going to eat. Don't throw away food. Kind of try and go back in time and think of yourself as a family having meals. And that means meals that you might pack for lunch, things that you might eat for breakfast, and then how you might eat dinner and at what time you eat dinner, and can everybody get together and sort of share the meal planning, make it more of an event, because all of this eating out and having food brought in is very expensive. And on the tight budgets everybody's on, and with the food costs so darn high, we honestly can't do that. That's a mistake. So try and eat at home. I've seen many people online say, hey, start meal planning again. That used to be the thing we did. And I know that, the new generations don't look at it that way, but I think culturally we need to eat a meal together. And I think eating a meal together with meals and with food that we cooked and that we sit down and set a table really not only saves money, but it also puts the family back together, or the partners back together, or the unit of people who are roommates back together. It's really a solid idea, not only for society, but for your wallet. It really makes a difference. I was asked the other day by a much younger person than I am, actually a teenager, and they said to me, is it better if I have cash or money in my account to pay something with a debit card rather than charging it on a credit card? I thought that was just a genius question from such a young person. And I said, the answer is almost always yes. Because when people put things on credit cards and they spend all the underlying money on the things they need right now, when the credit card bill comes up in 25 to 30 days, that money might be gone, or they might have forgotten about it, that expense. So I am a person that pays with a debit card a lot of the time. And I always make sure I know what's in my account. I make sure that I can handle taking the cash out of it, and I use a debit. Usually if it's a big ticket item that I know I can pay next month in full, I'll put it on a credit card. My rule of thumb is after 3 months, unless you have ongoing expenses on your credit card, after 3 months, the one item you put on there should be paid off. In other words, I always use this example, if you put $600 worth of tires on your car, those tires should be paid off within 3 pay periods or 3 credit card calendar periods. Because why? Because then all of a sudden, with your interest rate on your credit card, you're starting to pay $680 for those $600 tires. So you want to make sure you keep track of that. And the third thing would be, how in the world do you know what you need every day for money if you don't calculate it? Something that most people do, is they use their money from paycheck to paycheck, or they look at their money as only twice a month or every other week or once a month, instead of looking at their money every single day. It's really important for you to know what is your net income for the month, how much money you're bringing in, and how much money you need to put out. So you take the money you bring in, divide it by 30, and see how much you make every day. And then you take your expenses, put the big ones all together, the ones you know are static, you divide that by 30 and see how much expense you have every day. Every day when we wake up, we're starting a new day and we're spending money and possibly earning money. pay on the same day. See if it matches up. Do you need $300 a day to make for your family? Do you make $300 a day? Do you need $1,000 a day when you're paying tuitions and stuff? Do you make $1,000 a day? Nobody looks at their money that way. That is one of the biggest personal mistakes people make with their finances. Eating out too much and not taking into consideration the cost of eating out versus buying your groceries, using your credit card way too often instead of actually using your debit card and having cash removed from your account as long as it's there and it's not bouncing anything. And then thirdly, looking at your money every day. And I don't mean just going on your checking account and looking or going, to PayPal or Venmo or Apple Pay. I'm talking about actually seeing, do you make enough money for what you spend every day? Do you bring that amount in? And if there's a deficit there, you need to learn what to do to close the deficit. So I can go into more detail. If you want to like and subscribe, whatever you want to do, please let me know and I can get you some more detail. So I hope this helps. Those are the top 3 things that harm your personal finance.